Nobody likes long intros, and I used up a lot of time with my opening animation, and I'm going to keep doing it because I spent a lot of time making that. And we're going to talk to ADVFN CEO Clem Chambers about Tesla. Tesla joined the S&P 500. What does this mean for the long-term market valuation of the company?
Tesla is a case in point of the current equity market, which doesn't make any sense. Now, I don't know how many times more it's worth than all the other car companies put together. It's Tesla time, but it's a lot. And they make cars. They don't even make trucks. They make cars, and they're incredibly valued, and everybody loves them, and it's run by a genius, and everybody's totally excited by the prospects, et cetera, et cetera. But ultimately, if you went back 4 years or even 20 years, and you can get electric cars, Ford and GM weren't worth anywhere near what Tesla's worth when they were the dominant companies. And if you look at Toyota and Ford and GM and Mercedes, anybody want to roll them all up into a ball when they're at their peak in the last 10, 15 years, weren't worth anywhere near as much as Tesla. Now, so what Tesla can do in the best possible case on planet Earth is be the only car company making the only thing that anybody buys as far as cars go. Well, then they're still worth way more than all those companies are worth at their height. So how can it be worth that much, or let alone be worth more? Because remember, if let's say Tesla is absolutely perfectly priced for what it is, well, how more far can it go? Well, you wouldn't have thought very much, right, as an investment. So if it can't go any further, why would you own it? You'd sell it, it's gone as far as it can, and you buy something else, wouldn't you? But that's not what it's all about. This current market is all about huge waves of money being pumped into stocks. And those stocks provide liquidity, provide a method of people to trade all sorts of markets because they correlate with other markets and enables you to hedge and arbitrage all sorts of other assets. And if you're in an index, well, you can arb the SPY with Tesla and some other companies, et cetera, et cetera, et cetera. So it's part of a financial system, and Tesla is part of that financial system. And that's a financial system where huge amounts of money are being pumped into it. And guess what? When you pump things into objects, they expand. And the market is at an incredible valuation, doesn't really make any sense. And it's a factor of all this liquidity being pumped in by the Fed to support the American economy and to a lesser extent the global economy from the actions to try to control the COVID pandemic. And what that actually means is when you look at the price of the SPY today, or for that matter, Tesla today, that's the value of your money tomorrow, because the value of your money is going to go down. So if you add a naught onto the price of everything, well, obviously Tesla can go up a lot. But in real value, in McDonald's, in hard wealth, it won't go up. So what I believe is happening right now, there's a lot of people with a lot of cash, or for that matter, the ability to borrow. Because remember, if the value of money is going to go down tomorrow, you borrow it today because the value of your debt is going to shrink. So if you buy a gold bar with borrowed money today, in 2 years, when the value of your dollars has gone down and your value of your gold has doubled, yeah, you haven't got much to repay, have you? And in Germany, when inflation was however many thousand million %, people who had debts before the inflation struck didn't have debts by the end of it because you could just take a little coin out of your pocket and pay off your mortgage, because the mortgage that was $300,000 in the time they took it on was now about the value of an egg. And inflation destroyed debt so much that they actually passed a law in Germany saying whatever you owed then, we're going to redenominate it into the new currency. You're going to owe 10% of it. So basically, the people that lent the money took a 90% haircut because of inflation. So right now, if you could borrow a lot of money at 1%, isn't that fantastic? And buy stuff, anything you like, right? You are basically getting a free ride on what's coming next, which is inflation. And it is coming because they keep pumping money. They keep pumping and pumping. You can't keep pumping it forever and not expect prices to go up. And they will. And they are actually going up right now. You can go to a certain place. You go to a restaurant and you sit down and you go, oh, this was $15 a plate before COVID. Now it's $23. What happened there? And food prices are starting to move, et cetera, et cetera. But if they keep pumping money in, keep making more and more money and not make any more stuff, prices are going to go up. So things like shares is a good place to stash cash, or for that matter, to borrow cash and stash it in, because they are real things. And when the value of money goes down, their numerical value, their nominal value, their value in the number of dollars that it costs you to buy them will go up. They will not go up in terms of the cost of a Coca-Cola. And that's what's pushing the market. The fact that inflation is going to come, it's going to come hard, and you can borrow money for nothing. It means you just borrow money and you stick it in equities. And even if there isn't inflation, if you stuck it in Exxon, you can borrow money at 2% and get an 8% dividend off Exxon. I mean, why wouldn't you do that? It's called a carry trade. And that's what everybody's doing all day long. And Tesla's just a part of that. And that is what you get in a speculative market, up like a rocket, down like a rock. And anybody that believes Tesla's going to go up a long way from here over the next 10 years, unless inflation comes in and turns the cost of a beer to $100, is going to be disappointed.
So if this is a topic you guys are interested in, then I got some good news for you. We should be getting another Tesla video out tomorrow because I'm going to be interviewing a gentleman that writes for MarketWatch. Be sure to like, comment, and subscribe if you like the video, and I'll see you again soon.